All right. Okay, let's wait for one more minute and then let's jump into things. Oh, morning, Neophi. All right, 9 o'clock. Let's jump into it. Right. So, well, this is Apple's 1 hour chart. And first thing first, if Apple reaches here, it's going to go test this number here, 152.20. Very likely it's going to come back down into the mean at 152. So, and if it breaches the mean, then we'll plot for the downside, perhaps into 150.76, then very likely into 149. 48.99. So let's round that up at 149. So that's thing number one. And if it bounces back, you know the drill. It goes back and hits this 5 and 8. New hour just began, and so the downside is right here, 152. Upside is right here at 153.50. So that's Apple's trade. 153.50 clears, then it's going to go hit this number right about at 154.40. That clears, it's going to go hit 155.73. That's the upside, and this is the downside. That's fine. That's fair enough. But uh, and then the futures are doing what the futures were doing. They were up and they were moving. They were down. Now they're moving up. And then let's go find where is this trade coming from. Obviously, it is getting oversold here, and hitting the super trend, hitting the this thing right here, and is bouncing. Fair enough. But this is not where the trade is. This is the chart that you want to look at to place a trade. But this is not. We need to understand where it is stemming from. For that, we go here. This is where the trade is, right? So we've been tracking this chart for a good while now, and let's go here, right? To a damn T. I think if you have the videos from last week, we've been talking about this, and it hit that number to a damn T. And it was there for a bounce, and we got that bounce, and we know that this was going to bounce. Uh, we discussed this chart pretty heavily for the past month, right? And it did everything that we wanted it to do, came back down, hit the mean on the month, and it is bouncing. Now, the bounce, we knew that first bounce would happen all the way. And then the reason for DXY bouncing is obviously the 10 year. But cumulative, we want to see either DXY or UUP, either one of those. Okay, now, this last time, this was a spike, come back down, and this time we knew it was going to spike, and it cleared it, the mean, it cleared the second standard, cleared the inner Bollinger Band, hitting the first standard, hitting the second standard deviation. This is pretty clear. This move is pretty clear, and also the second standard deviation happens to be the 8 on the week. So that's crystal clear. Now it moves up from here, and ideally I think it should take a breather, but after the breather, which it is doing right now, but after the breather, if it starts to come back up and clears this second standard deviation on the day and the 8 on the week, and then very clearly it's going to go hit this number. Very clear. 103.60 to 103.80. Right? Within this range, there is pretty decent resistance for the 10 year. And if it does go there, then very likely it's going to take a breather from here. That is only if it clears that. But I think the bigger picture is going to go all the way here to 104.55 area. So this is the chart we are tracking. We've been tracking this chart. 5, then the one standard, then the 8. If that clears, then very likely it's going to go push here, 104.15. If that clears, then very likely it's going to go push all the way here into 105.15. There are, and then this SMI is crossed to the upside, and this is about to cross now. So there are pretty decent chances that it'll, after this breather, it'll come back up, clear this 8. It's going to go hit this number, take a breather there. It's going to go all the way through here, and even probably hit the mean on the week. So this is okay. If this happens, I think that's just logical to happen. But I'm not expecting that to happen in a straight line. Just like what we saw here, go up, come back down, then start to push to the upside. If it clears here, then it's gonna go hit this number, 103.60 area. and another breather. Then after that, 103.70 area, another breather, 103.80 area, another breather. That's how I'm looking at things. And if it clears here, the third standard deviation on the day, then very likely it's going to go hit this number right here, and we'll look for another breather, right? And how deep of a breather? I think that should be a pretty decent, at least 1 point breather on that. But after the breather, if it still comes back up here and clears this 104.20 area, very likely it's going to go hit this number, and this should act between a 105 to, let's say, a 105.25 area. Should act as pretty decent resistance for this DXY. Very likely, if it hits here, then it should come back down. That's when the SPX will start to move up again, and DXY, yeah, it's taking a breather right here. So it makes sense. So if it starts to come back down here, then we'll see it at 103 area, because that's where the 5 is. At breaches, we'll see it at 102.72 area. That's where the one standard deviation is. And I'll not be tracking it here, but for the bigger moves, I'll be tracking it here. To the upside, probably this number, the 50 EMA, if that clears the 50 EMA. That's the idea on the higher time frames. And this is where exactly I'll be tracking this chart. The 5 is detached from the price right here. The 5 is sitting right about here, 102.52, and the one standard deviation is sitting all the way down here at 102.82. So 102.80, let's round that up. So to the upside, the 50, yeah, 50 MA, 108, 103.60 to 103.80 area, and to the downside, 102.80 to, let's say, 102.50 area, right? So that's where the game will be played. And how will that translate? So the thing is that now, how will that obviously we know the direction now. How fast of a move, the velocity of that move is yet to be determined. How would you figure out the velocity of the move? Then you got to go here with Apple, and if Apple starts to push to the downside and starts to reach right about here, that's the second standard deviation. It violated the second standard deviation. Then it's coming down, and I'm hoping that it should come back down and breach below, and in fact come back below its second standard deviation, start to come back down, probably to its 5, which is sitting at about 149. That breaches the 200 moving average, 147.70 area, right? So the 200 moving average for Apple on the day, that should act as very, very, very decent support for Apple. And if that breaches, then we'll look for further downside and further weakness in SPX, right? If Apple starts to push to the downside below its 50 MA, then that means there is pretty significant, what do you call, weakness uh, in SPX. All of this looks like it's overbought, right? All of this looks like it's overbought. The RSI is overbought, and this right here, this is also overbought. So it's fine. I'm not sure. So let's reassess. The mean reversion should happen, right? The mean reverted right about here. It tested the mean last time right about here. That was Jan 23rd, right? 12 Jan. So that's 12 Jan. And it makes sense for it to violate the second standard deviation and start to come back down. I'm not making a case for the mean reversion just yet. Mean is sitting right now here at 139.60, 139.50 area. I'm not making the case for the mean reversion just yet. I would start to make a case for the mean reversion if Apple starts to break below the 200 moving average on the day. That's when I'll start to make a decent case for a mean reversion, right? So this 200 moving average should act as pretty decent support. So I think if it starts to come back down, this is where I'll exit my puts again for the overall market. And then if it starts to push below there, then I'll place my puts again up till here, the 8. And if it hits the 8, I'll exit my puts again. Then if it starts to breach below 8, I'll place my puts again all the way till here. And very likely, if it breaches the 8, very likely it's gonna then it'll be a stronger case for it to come back into the mean. 139.50 is where the mean is right now, roughly. And let's see to the upside. If Apple starts to push to the upside, then very likely it's going to go hit this number again, which last time acted as pretty decent resistance. And so 156.80 area should again act as pretty decent resistance. That clears, very likely it's going to go hit this seven. Let's round that about 158 area. That's the second standard deviation on the on Apple weekly chart. Right now, the third standard deviation is sitting at 165, and I don't believe that's the case. However, if if it starts to move to the downside and it comes back here, the 50 moving average on the week at 151, and then it starts to bounce right here, then we'll start to make a case for all the way up here into 165 to 166. Why? Because there is a lot of money sitting on the sidelines, and unemployment is at its historical lows. So even let's say even so, generally the cycle, the way cycle works is that when you have full employment, or rather almost full employment, and then you will have the credit card debt is at all time highs. So uh, so now you can't go any further down, right? So that's the reason the Fed is trying to raise the interest rate so that the full employment economy is can withstand that, right? The interest rate hikes. So I'm thinking that Fed will keep pushing it to 5.5, and probably that's where you'll start to see some softness in the market. In the When I say market, I mean what do you call this? Unemployment uh, numbers. So probably once Fed starts to move above, let's say, or closer to 5.5 on the interest rate cycle, then probably you'll start to see some softness in the employment market. Right now, employment market is pretty tight. So we'll see some softness in the unemployment numbers, and then very likely that is the story for 2020. That's when you'll start to see the actual recession come into play, and very likely that's a 2023 later half story, probably even 2024 story. And I don't really see any fundamental reasons for the market to go down. Just the what do you call the technicals on the daily is on the day, as we saw right here, these are just a bit overbought. That will call for a mean reversion, and we know this phenomenon, right? We know the second standard deviation violation, then start to come back to the mean. So if that happens, right, and then you will see people calling for mega death again, that's just the market function, right? Very likely it will come back into the mean on the day at around 139, or around here 138.50 area. So that's what I'm looking at. I'm not looking at any deaths in a sort of a scenario. I'm not looking at as of now where we stand. I'm not at all looking at what do you call new lows. But if the unemployment picture starts to deteriorate, and then if that results in defaults on the credit side and the unsecured debt side, first shoe to fall would be the unsecured debt, right? The credit card. So that's the first thing. But if that, so there are counter trends to that. So now look at the data. I think I posted that data a couple of days back about used car sales, right? Used car sales are still going up. Not just the sales, but the prices of used cars are still going up, and the commodities are okay. They were overbought. They cooled off last week a bit, but still that is also going on. So what is happening with this market? Yeah, couple of things. Overbought conditions, fair enough. Then you have this guy US 10 starting to move up, right? So if it starts to clear this, we were looking at 3.66, I think, on the US 10, and we were getting our number from right about here, right? And we want to see this get tested, 2.66. And I'm not looking for a mean reversion just yet. A mean reversion on the week will happen about 3.75 area. Not looking for that just yet. However, if if the 10-year starts to move to the upside in a hurry to achieve its mean on the week, then we're very likely. That's just logical again. There's nothing outlandish about it. It is logical for the price to do what it is doing. So I'm not really terribly worried about it because we understand how this thing works. So even if it starts to move to the upside, 3.66 is what I'm watching. If that clears, then I'm watching 3.75. If the velocity of this move is faster, then very likely you'll see a pronounced move to the downside in SPX. If this move to the upside is muted, just like what is happening today, 3.3%, and then probably tomorrow another 3%, and another 3% after that. So if the US 10 moves, slowly like this, then you'll have, those 1% to 1.5% plays to the downside on SPX, right? And those moves will be pronounced in Nasdaq, of course. If the interest rate moves to the upside happens here on the 10 year, then you'll have these moves on the Nasdaq as pretty pronounced, probably, I don't know, 2% days or something like that. Yeah. Right. Let's go here. So this is where either it needs to take a breather right about here, and however, look at this technicals here. Right, we are watching the MACD cross to the upside on the daily. So maybe we'll have some more room to the upside. And last time the MACD crossed, here it gave almost a full cycle. This is still not a full cycle, but we'll call it a full cycle. It's almost a full cycle because it was able to move above the zero line. So it's almost a full cycle. So I don't know if that's going to be the case this time, or if it's going to go all the way up here and test the highs on the MACD zero line and then start to come back down. If that's the case, because the MACD is crossed on the to the upside on the daily, then very likely it will start to form a trend. Then we'll see this 3.66 area. If that clears, then it's going to go hit the second standard deviation all the way 3.69, 3.7, and by the time it hits this 3.74 to 3.75 area, I think this current move in the 10 year should be done, right? And the whole game with the 10 year, I think for now is will be played within this number 3.75 to the upside and 3.37 to the downside. That's the whole game, I think. Unless this thing clears this 100 moving average to the upside, 3.75, 3.76 area, it would not be bothering much. I will not be bothered much by the US 10. Yeah, if it clears this 3.75 to the upside and start to move beyond that, then yeah, we need to pay attention to that. Till then, it's just a logical move, right? Cool thing. What else? Let's get into a bit of, and we understand what Apple is going to do. We'll discuss about it. Let's get into, well, let's look at these numbers now. This is the daily chart. No surprises, right? Nobody's surprised with this chart now. We've been watching this. We know this, how this plays out. Five, second standard deviation violation. The five, the eight. If the eight breaches, then we are looking at the further push down, 4077 area. Then come back down here at 4064, another bounce, and then if that breaches 4043, another bounce at 4035. And so 4035, I don't believe that's the case for today. Very likely we want to see a breach of this number, 4110. Let's round up at 4100, right? To the downside, we still want to see 4100. If that breaches, then we'll go for another. By the time it hits that 4100, it will be probably a percent move, right? It will be a percent, 1% move. And if that breaches, then we are looking forward for another 0.5%. 0.5% would put, I don't know, another, let's say, give or take 20 points from 4100. So 4080, right? And probably that if that overshoots, I'm looking at 4080 to the downside. That would make it 1.5%. And if that breaches, then very likely we're going to test 4064. Today, not plotting anything sub 4064. Actually, I'm not plotting anything sub 4080 on the ES. So take about another 10 points from the 10, 12 points from where ES is right now. So 4018, so that would mean about 4008. And if the ES comes to 4100, so that would mean about 4090 on the SPX. And if it breaches below that, then we'll see further downside in the SPX, right? So just take out 10 points from the ES, and we'll have our SPX numbers. Cool thing. And this is the 1 hour chart. Obviously, it's getting oversold here and starting to push to the upside. Fair enough. And if Apple kind of starts to move to the upside again, this is the number I'm watching right here. If if ES starts to come back down, then 4080 probably is the low, should be the lows for today. And I'll be looking, if that happens, then I'll be very much looking for a bounce right about here. Yeah, so that would make it a 1.5% day to the downside. Cool. And to the upside, if it starts to push right about here, it needs to clear 4118. Then we'll look for a push all the way up here at 4121. And if that clears right about here, and the mean is sitting right here at 4131. If it clears this number here, 4121, then we'll look for further upside. First hit of 4126, then a hit of 4129, then a hit of 4131. Not plotting anything above 4131 as of now. But if Apple starts to move to the upside, then we'll look forward for further upside beyond 4131, and definitely not plotting anything above 4140. Well, I shouldn't be saying definitely, but yeah, that's the way it looks as of now. 4040 seems like it should act as pretty decent resistance. But if that clears, then we have throughout the day we'll keep reassessing the whole situation. 4153, you know the drill. You know the drill. Five clears, then eight, eight clears, then next line. If that next line clears, the next line. Usually this is still where it's a clear move. It start to move to the upside. The mean reversion on the hour. After the mean reversion, we'll definitely start to reassess the whole thing. Okay, and let's get a bit into Microsoft. It pulled down pretty decent. If it clears, if it starts to push to the downside from there, very likely it's going to come back into the one standard deviation, 249. That breaches very likely 247. For this to happen, 247, 246, for that to happen, Apple needs to start to come back down and test its 200 moving average. Without that, I don't think this move to the downside about 246 is possible. So let's stay here on the daily chart. Yeah, it will come back down right about here. This is what I'm expecting from Apple as well. For Apple to come back down, very likely it's hitting the second standard. It's hitting the five right here, right? And again, the same thing. There's nothing, nothing out of the ordinary with this one as well. Second standard deviation violation and starting to come back down. Then the five is getting tested, 254.70 area that breaches the 200 moving average, 254 area that breaches, and 251 area. As of now, not really looking at anything below 251 for Microsoft. If that breaches, then we'll look forward for a push all the way down here into 245. But as of now, this 200 moving average is what I think should hold it. Same goes with Apple. And if Apple and Microsoft both push below that 200 moving average on the day, then the story starts to push to the downside. Then we'll start to make a case for the mean reversion. Right. So that's how I'm looking at things. And right. And again, go back down here into the 1 hour chart. Look at Microsoft. What is it doing? It's trying to get oversold. Cool. And it is hitting a long-term support here. Very likely we'll see a bounce at open. Very likely 256.40, 256.50. And then you know the drill. Same thing. 5, 8. Right about here is a 5. That clears, and the 8, then the 21, then the mean is sitting all the way here at 260. If Microsoft takes this back to the upside, then we'll have some push to the upside in SPX. And if Microsoft breaches this number right here, and we're going to go push all the way down to 54 and 253, and this 253 should act as pretty decent support for Microsoft right here. And then we're looking at push right about here at 252 area, right? So that's what we're looking at for Microsoft. And by the time it starts to come back down here at 253, we'll look for the first bounce. Then if it starts to come back down right here, first thing I think we'll get a bounce here at the 5, then we'll get a bounce at 200 moving average. This will hold for a while. If it breaches that 254, 200 moving average, then it'll come back down into the 8 on the day. That's about 252, 251, 50 area. 252, 251, right about here, the third standard deviation. Then we're looking for another bounce here. Cool thing. Let's get with Tesla. Yeah, Tesla should have probably hit this number before pushing down 202. I'm still hopeful for that. I'm still hopeful for that 202 for Tesla. In fact, this is the chart that I'm watching with Tesla. Right here, it should go hit this 207. Then very likely it should hit this 228. This 228 is where I'm sitting with Tesla, but might not be the case for today. But this is very likely the case for today, 208. is the case for today. And that's the is it 206, I think, 206.50 area. That's what I'm looking at. Wherever the 8 on the daily, sorry, 8 on the month is, I'm looking at that to get tested. That clears, but I think it'll start to, it'll take a, this should act as pretty decent resistance for Tesla stock at the 8 on the month. And then if that hits, then we're looking for a push down into 198, very likely a push down into 191, and then if that breaches, very likely a push into 163. And it all depends on Apple by and large. Apple earnings weren't all that good for the quarter, but that's in the rear view mirror, and that's in the past now. So, and the guide forward looking, Apple has guided, pretty decent. And I think if Apple, even if Apple starts to push to the downside, I think that will be considered as a buying opportunity, unless something structurally changes in the economy, and we'll see, if we see unsecured debt start to default. Probably that's where we'll start to see some softness happening in the stocks. But bear in mind that the stock market will bottom out before the actual recession bottoms out, after the before the actual economy bottoms out of the recession, right? Because the market is a forward-looking mechanism. So that's what I'm looking at things. To the downside, 163.80 area. To the upside, if it clears right here around 198, and very likely we're going to see this 207 get tested. That's for Tesla. Come on, Tesla. We still got 4 minutes. Bear with me. Right. To the downside, right here. This is where it should struggle. And if it clears there, then this time very likely it's going to come back down into the five, wherever that five would be. Five will move up. Five would very likely move up because the stock has moved up. Very likely the five will be right about here around 187. To the downside, that's what we'll see, a test of that five. That breaches, then a test of eight. Wherever the eight would be, eight would also move up. Nothing here says overbought conditions. The RSI is a bit overbought here, but besides that, nothing says overbought. And if Apple starts to move to the downside, it will pull everything to the downside. However, if Apple stays buoyant to even a little bit up, then Tesla will be a $200 stock in no time. I'm looking at 208 actually for Tesla, but Apple needs to hold for that. So that's the idea there. Right. Let's quickly look at one last chart here. Tesla chart on the hour. Come on, come on. Right. So this is the Tesla chart on the hour, and yeah, this is 1957 area. That clears 197.30. If that clears, then 200 area. 200, 201 is what we are looking at, very likely. If Apple holds, we want to see this get tested. And I think that's a psychological number. Every majority of the people will try to exit Tesla stock around there. And nothing on this chart also says overbought anywhere. So yeah, and to the downside, we know the drill, 5, 8, then the baseline, 192.60. That breaches, the mean is sitting all the way down here at 190, 191 area. Okay, that's what I'm looking at things right now, and we'll keep reassessing throughout the day. However, this chart doesn't say anything about overbought just yet. These were the overbought conditions, and the stock was pushed down properly. That's just logical. Right here, nothing of that sort, and yeah, nothing tells this is a lot, and it did not make a upside right here. It made a the algo made a top here. Right now, the algo is not making a top, so we'll see where the top would be. As soon as the algo makes a top, very likely we'll exit the trade. All right, 1 minute to the 2 minutes to the open. Let's move into live trading.